All right, welcome back. It's the Avid Investor Podcast with me, your host, Josh Adamek. And today we're going to talk about my passion, single family homes. That's it. It's what we do. We buy existing single family homes and a lot of them. And here's why. So if I back it up a little bit, you guys know that Avid Private Equity, Avid Management Group, what we do is we work one-on-one with private, accredited, and institutional investors to create and manage portfolios. And those portfolios, for that, what we've learned over the years is, early on in my career, I did a lot of speculative type investing. I did a lot of flips. I did a lot of development. I did a lot of infill new construction, land assemblage type deals. A lot of speculative type stuff. And what I've learned over the years, and as my business grew, and as we shifted focus, and as we started working with more equity partners through the private equity company, through the equity partnerships that we offer, is we found that the majority of the folks that we work with, what they're looking for in their investments is safety and security. And, what we've found over the years is, and I've learned a lot of this from my good friends and mentors, is, there's no safer place to be. There's no safer place to invest than existing single family homes in B-class neighborhoods. And there's many reasons for that. Primarily is, regardless of market conditions, there's always a need for housing in B-class neighborhoods, and there's always a demand for housing. And again, that's regardless of market conditions. There's always a need for what we offer. So what we do is, we create managed portfolios of single family homes. We buy a lot of them, a lot of existing single family homes. And we do it for the safety, the security, of course, the cash flow and the tax benefits. And, the way we structure our portfolios is they offer a good rate of return. And, in addition to that, there's some capital growth. So reason for that is we buy existing single family homes. We put residents in there on a lease option type program, and our residents live there. They lease the home from us, and they have the opportunity, at any point to purchase the home and, make that their forever home. So we move these folks in there with the intention that one day they may purchase the home. And, the plan is that when we move somebody in, that they stay and live there forever. And we do this in B-class neighborhoods. And when I say B-class neighborhoods, I'm talking about grandma's house. If you guys follow me on Instagram or wherever, you see the properties that we purchase. And, when I say grandma's house, it may not be your grandma's house. It was my grandma's house. It's if you're in Pittsburgh, it's your 1950s, 60s built brick ranch or 2-story, sometimes wood frame, but you're 1,200 give or take square foot home in a regular house in a regular neighborhood, in a B-class neighborhood where regular hardworking folks can and want to live. That's where we invest. That's where we focus. It's in the median price point. So in the Pittsburgh market, it was 150,000, 146,000 for the longest time. Given the fact that the market's been on the rise, I think median price point right now is 183, 186, something like that. Last time I checked, it was still sub 200, but that's the areas that we invest in, where homes are legitimately worth, between $100,000 and $200,000, give or take, after repaired value. those are the properties that we invest in. Those are the areas that we invest in. In and around Pittsburgh, 45-minute radius from my office is our buy box. So we have properties north, south, east, and west. And again, it's in B class neighborhoods. And my opinion is that when we work with when we work with our investment partners, as I said, we've learned over the years that they're not looking for speculative type investments. They're not looking for something that looks cool or that looks fancy, or that their expectations aren't these crazy projected returns that some of these speculative type deals can generate if all the stars align and everything goes right. The folks that we work with, they're looking for their money to be safe. They've taken all their risk in, and I've heard this many, many times, when talking with our partners is, they're successful business owners, they're professional athletes, they're semi-retired or retired business owners that have taken all their risk and have worked so hard to create their business, to create their wealth. They've taken their risk on the field. They're currently taking their risk on the field. They're currently taking their risk in their business. When they invest in something, they're not looking to take additional risk. They're looking for their money to be safe and secure. And what we do is we create and manage portfolios of single family homes that offer that safety and security. Regular houses in regular neighborhoods, regardless of market conditions, they perform well. They produce results. It's not speculative. And, in Pittsburgh, there's always a need for housing in B class neighborhoods, regardless of market conditions. If the market's down, if we go into another downturn, another recession, there's always going to be a need for housing in B class neighborhoods. Folks might be losing their homes in the A neighborhoods, or might not be able to afford to live in the A neighborhoods anymore. But they're gonna, need somewhere to live, so they go back to the B neighborhoods. Maybe where they should have been all along. Who knows? But there's always a need for that housing. So in a down market, there's increased demand in B class neighborhoods for housing. In an up market, there's still a need for housing in a B class neighborhood. There's always a need for housing in B class neighborhoods. That's why we focus where there's always going to be a need, regardless of market conditions. We buy homes, we invest in single family homes for the long term. We're not doing quickie flips. We're not doing anything on speculation. We're not buying, burned out shells that we're gonna renovate and that we're gonna put on the market, assuming the market continues to be good and sell for a profit. No, we're buying these homes. We're placing families in the homes that are going to lease the home from us and live there. And maybe one day they're going to exercise their option to purchase and own the home. Maybe not. But we don't buy on speculation. We buy single family homes that make sense, that have some equity, that have positive cash flow, that are in good areas, that are non-speculative type areas. We don't go into the C neighborhoods. We're in the B neighborhoods, B class neighborhoods, where good, hardworking families can and want to live. We're not in the A neighborhoods. We're not investing in the A neighborhoods where we'd be seeing negative cash flow, and buying homes, based on speculation that the market's going to continue to rise. We don't do that. I mean, if you want to be speculative, go to the casino. I mean, why not? When you're looking at investing in real estate, buy stuff that makes sense. And that's what we do. Single family homes. Now, why do we buy single family homes why would I go out and buy, 10, 20, 30, 50 single family homes as opposed to going out and buying a 10, 20, 30, 50 unit apartment complex? It's because there's always a need for single family homes, regardless of market conditions. Depending on the market conditions, vacancy rates may change in apartments. Not to mention, if I'm going out now to look to acquire a multi-unit property, good luck. I mean, we're at or near the top of a market cycle. I don't even look at multifamily properties. I see stuff that comes across my desk every once in a while, comes in my email every once in a while. I'll take a quick look, but I'm not actively out shopping for multi-unit properties. But what I can tell you is that we're at the top of a market cycle right now. So if you're looking to buy a large multi-unit property, you're going to pay market price for that multi-unit property unless you are fortunate enough to find that absolute needle in a haystack property that's undervalued, that's under rented, that's mismanaged, that has value add, that you can go in and you can create additional value through, renovations or increasing the rents or, better managing the property. Are there opportunities like that out there? Yes, but you can't go pick them off. You can't just go say, this is what I'm going to do and go find one. Those are very few and far in between. And if you are able to find a value add multi-unit property that makes sense in this market, you're very, very fortunate, or you've worked very, very, very hard to find that. So, when we look at acquisitions, regardless of market conditions, we're always able to buy the single family homes that make sense for what we do. In an up market, we got to work a whole lot harder to find them, but we're still able to find them. So we're able to acquire the properties. And, when I look at the safety and the security of the investment. When I look at it having, 10 or 20 single family homes in portfolio, as opposed to a 10 or 20 unit apartment complex, we can better manage 10 or 20 single family homes. We place folks and families in these homes that want to make these homes their forever homes, that take care of the homes a little bit better, that have a sense of home ownership, that are in it for the long haul, that are going to stay longer. When we look at when I compare that to a multi-unit property, you have apartments that are constantly turning every 12 to 18 months, maybe sooner, maybe longer. But, people tend to camp out in apartments. People tend to move into a single family home to make it their home. I don't know of anybody that said, when I grow up, I want to live in a 2-bedroom apartment with 10 other people next to me. People, when their dream, their desire, their goal, a lot of people is to own a home and to have their own home, not have their own apartment. So when we look at management, we have less turns, typically have less vacancies in single family homes as opposed to apartment complexes. When we look at, the potential for exit, for sale, I mean, we have no intentions of selling our homes and portfolio. We have no intentions anytime in the near future of selling our entire portfolio or anything like that. But, if you compare the two, single family homes have multiple exit strategies. Multifamily properties have one exit strategy. Single family homes, we can convert to our current resident. We could clean the home. We could renovate the home. We could put it on the market, sell it retail. We could sell it to another investor. We could package the homes up and sell them to an institutional investor. Again, those are kind of depending on market conditions, but our strategy is not to sell. Our strategy is to hold these homes long-term for the cash flow. If you're looking at owning a multi-unit property, you got one exit strategy, and that's to sell to another investor. And selling to another investor, they're going to be buying based off of the performance of the property, and the market is going to depict what valuation, what cap rate that property is going to sell at, is going to trade at. So again, you're investing sort of on speculation, because at some point you're probably going to want to exit that property, and that's going to be to another investor that's going to buy off of the cap rate. So you have to be aware of that if you're going to exit, you're going to want to exit in an up market, not a down market. So there's, again, with multifamily investing, there's one exit, and that's to sell to another investor. With single family homes, whether it's 1 or 100 or, 500 or whatever, you have multiple exit strategies should you choose or need to exit those properties. So, safety and security, we buy stuff that makes sense. There's the management, in my opinion, is better with single family homes, because, even though my team doesn't mind putting the work in, that's what we're here for, is to manage the properties, manage the portfolios. But there's a cost associated with that. Every time a property turns, single family home or a an apartment, there's a cost associated with that. There's loss of rents, there's cleanup costs, there's utilities, there's might need some repairs, some renovations. So every time a property turns, there's a cost associated with that. So if we can minimize those turns by investing in existing single family homes that don't turn nearly as often as apartments, I mean, it's a no-brainer. So our focus is single family homes, existing single family homes in B class neighborhoods. We that's what we do. That's what works really well for our equity partnerships and our equity partners. We've got the safety, the security, the cash flow, tax benefits, of course, with owning real estate. It's a long-term investment that kicks off a very favorable rate of return, and of course, there's some capital growth over time. So, we hit all aspects with single family homes, and when we can do that by investing in single family homes, there really isn't a need for us to look at other opportunities. So, I've compared single family homes to multi-unit properties. I could sit here all day long and compare it to different investment strategies, but we found something that works really well for us, works really well for our investment partners, and we just do it over and over and over and over again. I mean, consistency is key. We have a model that works, that performs regardless of market conditions, and we just do it over and over and over and over again. I don't go looking out. I don't go looking for different opportunities. I mean, I get people that hit me up all the time with crypto, blockchain, NFTs, PPE, commodities, all these crazy, flashy, speculative type. I'm going to say speculative. Maybe I'm misspeaking. Maybe I don't know enough about it. It's because I'm focused on what I do. But, all these new, trendy, and speculative type investments, it's not what I do. I mean, we buy existing single family homes because it makes sense. I mean, that's the bottom line. So, I've compared it to single family homes to multi-units. If you compare single family homes to, development or things like that, in my opinion, I've done a lot of development. I've done a lot of infill new construction. I've done a lot of flips, redevelopment type projects. I've done a lot of land assemblage type deals. And, again, what we found over the years is the safety and security of single family homes is where it's at. Sure, there's a lot of money to be made in potentially in development, in flips, and new construction and things like that. But all of those things are contingent upon market cycles. So, we've been fortunate for many, many years now. We've been in a market that's been trending up, and I don't have a crystal ball. I don't know when the market's going to correct. I know historically the market corrects every 14 to 16 years, 18 years, something like that. The last correction was in 2008. So do the math. I mean, we all thought COVID was going to be the correction. When it hit, no, I didn't know. Nobody really knew what was going on. First time I've ever seen, real estate completely shut down for 60 days, construction completely shut down for 60 days. Fortunately, as an owner operator, we were permitted to continue to manage our portfolios and provide clean, safe housing. But there was a lot of folks that were just shut down with real estate sales, with construction. All your renovation projects were shut down. It was just some crazy times. And little did we know that when we came out of that shutdown, that the market just went insanely through the roof. And that's starting to come back down a little bit, starting to cool off a little bit. But it was some wild times coming out of the going through the COVID shutdown and then coming out of that. But again, so that's like single family homes to construction, land development, things like that. My opinion is that with construction and land development and speculative type investments is, yes, there's a lot of money to be made. You can make a lot of money in those types of projects, but those are contingent upon market cycles. And, as I mentioned before, safety and security is our focus with our portfolios of single family homes. And then, there's always like commercial real estate that comes up. I've owned some commercial real estate. There's some money to be made in commercial real estate. What I did was a speculative type investments with commercial real estate, where it was my own money, my own projects. But and I did well there. Again, I bought it right, and then the market continued, and there was an opportunity there. So we did well with some commercial opportunities. But again, if you're looking at buying commercial for the long term, in my opinion, again, this is my opinion, it's just so much easier, so much cleaner for us to go out and buy 10, 20, 30, 40 single family homes, as opposed to, going out and buying, a commercial office building. They can make a lot of money, commercial can make a lot of money, but you can also, have vacancies that take, years to fill. And, typically with commercial, once you get the vacancy filled, you're going to get into a 3-year, 5-year, 10-year lease or longer, depending on the space. But, when those properties go dark, they can go dark for a very, very long time. When I look at that compared to existing single family homes, we close on a property. It takes us about 30 days to close. Might take us anywhere from a week to, a month to get the property cleaned up and ready to fill. Then we'll market the property for a couple of weeks, give or take, and typically find some folks or a family that wants to move in the home and make it their home forever. So it's, again, there's always a need for housing. There's always a need for homes in regular houses, regular neighborhoods. But if I go out and I buy a commercial office building, yeah, there's market studies, there's data available, there's vacancy rates available. But, if I'm trying to fill a 4,000 square foot office space in the north suburbs, I have to find that business that wants to be in the north suburbs, that needs exactly 4,000 square feet, that, is willing to commit to a long-term lease on that property. And there's some variables there where, if I compare that to, filling a couple of single family homes, there's always a family or some folks that want to live in a 3-bedroom house, a regular house in a regular neighborhood. So to me, it's, it's what we do. We keep it simple. We keep it safe, we keep it secure, and we just do the same thing over and over and over and over again. And consistency is where it's at. Consistency is key. So, that's where we're at. I could probably stay on here for hours on end, just talking about what we do and why we do it. But I just wanted to get the highlights out there of why we invest in single family homes and why we invest in single family homes versus, the thousands of other investment strategies there are that are out there. It's just regular houses in regular neighborhoods where, regular hardworking families can and want to live. That's what we do. That's what we invest in. That's our focus. And I just felt the need to, dive into the highlight reel of what we do. And of course, if you got any questions, hit me up, send me a message, text, DM, whatever. Let me know, what you want to hear more about. Let me know what you thought about this episode, what you thought about previous episodes. And again, I'm not asking for anything in return here other than if you find value in the message that I deliver here, just please go ahead and take the link, pass it along, share it with somebody that can benefit from the message that I'm putting out there. So thank you so much for tuning in. I appreciate you listening, and that's it for today. So have a great day. Thank you so much.